All right. Good day, guys. Good day, colleagues. Good afternoon. Good morning. Good evening, depending on what time you be watching this video and depending on where you are. Um, Welcome to another brand new video. This is my first video of the year 2023, and I hope you enjoyed all the videos that I made in 2022 and before that. And I hope that you gained something out of them, and I hope that going forward you'll get some content. Okay, so now if it is your first time watching my video, please go to my YouTube page and then watch other videos as per the headings there, and I believe that you'll get something useful or you will revive yourself. All right, thank you so much once more just for taking your time and watch all this. Please don't forget to like, subscribe, and set the reminders and set the notification for yourself, because I aim to give you some good content. All right, so now as you can see on the screen there, without wasting your time, you can see it's Nasdaq. I usually, in fact, I don't trade Nasdaq anymore for one reason only. Not that it dribbles me. I'm not dribbled by the market. I don't trade Nasdaq because I used to trade with the local brokers, and then they messed up, and then the international brokers, the one that I recently used to trade with, its spread was too much. So no, I can't do that. So now let me not promote any broker for now. So the reason why I'm doing this Nasdaq is simply because I'm doing the very last ever video of Nasdaq. Then from here it will be just synthetic indices only. So now I'm on V75 and I'm specializing with that. So however, here is your Nasdaq. I'll show you a full analysis of smart money, and we'll do some advanced things here. I don't know, some things maybe your mentor already told you, or you don't know about them, but this will be some full blow analysis. So if you don't get anything from this video, then I don't know. Please don't forget to subscribe to my channel. Let's interact. All right, so now here is Nasdaq on monthly time frame. We all see it's monthly time frame, and then where do we start? We start up here. We start with this the break of market structure here, and and a clean one. This is all you need to get your entries. All right. Now this is a break of market structure, and then after the break of market structure, you look for the order block. This is the order block here. As I said, I'll do some advanced things. I hope if you are a true smart man trader and you are not mixing it with anything, you'll understand why some of the markups are there. If it happens that I skip some part, I don't aim to do so. Now this is the order block, yeah. So when you see an order block, what do we expect? We expect price to respect this order block and then push back up again. Okay, cool. Now that we expect price to do this, there are some confluences that will confirm for you before the mitigation of an order block, that will confirm for you that surely that order block will be mitigated. Number one, you have to look at the current price action before the order block, especially on high time frames. Look at the current price action, look at the recent break of market structure. Which direction do we have the recent break of market structure? The recent break of market structure is in a bearish direction. And then where is that? Here's that break of market structure here. This is the recent break of market structure here. Right, cool. Now that we have this, remember we have a bullish order block that that is still to be mitigated. Now we have this bearish break of market structure here. Then now we know that after the break of market structure, we look for an order block. And then in this instance, where is the order block? Remember, we are still on monthly time frame, right? So now here is the order block here. All right. As you can see now, I think you can already see that that order block is already mitigated. Now the candle that mitigated that order block, it's the current price action, right? It's bearish, right? So now the order block is mitigated and price is it's heading towards what? Towards the swing that gave us the change of the market direction to mitigate the order block. All right. Now, as I said, I'll do some advanced some advanced things. I hope you all understand that. Now, where is that swing that gave us the change into mitigating another block? Here is the swing. This swing low down here. Okay, cool. Now we have this swing low here. Now price is likely to come and touch down here on this trend line here. All right, cool. Now we have a break of market structure, just a recap, and then we have an unmitigated order block, and then the current price, then the recent break of market structure is in a bearish direction, and that order block is mitigated. Now, fine. Now, I want you to notice something. Notice something in this box here, right? On monthly, it might not be clear, but I can see what's happening here, and then I don't know if you can see it, but I'll explain it to you from weekly. All right, so now it will explain again why we have this swing low here. As I usually say, there's no random move in the market. Each and every, it's either a swing high or a swing low, it is important. It says something, it speaks volume. The market always speaks to us, just that it's up to us to listen to the market or to listen to Instagram. Why do I say that? At times you do your analysis and then you go to Instagram and then you see whoever you follow Instagram say, hey man, we're in deep blues, we are buying this thing, we're buying this thing. Only to find out that your setup are saying to you that you have to sell, that you have to wait for a sell. When they say we are buying this thing, we're in deep blues, and surely it's true. They are buying this thing and surely they're in deep blues. But what is your setup? Your setup is a sell. So what do? You are now controlled by Instagram. Then don't be controlled by that. Be controlled by your setup. Hence the traders always say the same thing. Plan your trade and then trade your plan. Simple as that. All right. So now we go to weekly. Let's go to weekly now. Okay. Before we go to weekly, also there are a lot of things that happened here. But now let's focus on the current price action. All right. Now we have to refine our order block now. All right. So now we start with this one here. Now when we refine our order block, this is the order block that we'll take, and then we'll take this one to monthly time frame only. Okay. Now I think you saw something there. I think you noticed something. I did not remove the rectangle before I refine this order block. I refine it first and then remove the rectangle. That is something to take home there, because it is important to do that. All right. So now this is the break of market structure. Then you do not refine the break of market structure. I get surprised when I see people refining the order block. Okay, fine. Another block you have to refine it until to your preferred time frame of entry. All right. We use different time frames. Some use H4 for entry, some H1, some M30, M15, M5, and so forth, all the way to M1. Now you do not refine the break of market structure. What do you refine? Only refine an order block. Now we refined our order block. Now this is our order block here. Okay, cool. Now let's come to this box here that I marked on monthly. So now in this box from weekly it start to be clear. Now we have this break of market structure here. We have this break of market structure here. A clean break of market structure here. Alright, so now what do we see here? I always say if this is not the first time watching my videos, you know that I talk about two structures in each and every market: macro structure and the microstructure. Then I always say price is likely to respect the order block of the microstructure before price respect the order block of the macrostructure. Now, also again, there are two types of structures. Again, we have a normal structure and then we have a swing structure. All right, sir. All right, cool. Now, what you call the swing structure, some call it fail of market structure, some call FTB fail to break, some call it FWT fail to take previous low, and all those things. So now it depends on which terminology you prefer. Now, since we have an internal structure, what do we do? We look at the order block of the internal structure. All right, and then do we really have an order block here? Yes, we do. What kind of an order block is that? I see a breaker block already here. Now, what is a breaker block? Now, a breaker block, it is a violated normal order block. Bearish 10 bullish or bullish 10 bearish. So simple as that. And then where is that in this chart here? This this here was supposed to push the market down. This candle here was supposed to be our order block. Now, however, what do we see? We see price pushed, price violated the very same order block. So now, what do we call that? It is now a breaker block. Now, in a breaker block, what do we do? Instead of buying, we sell. Instead of selling, we buy. We do the vice versa. Now, this you cannot just point it out like that before you identify the swing structure first. You need to know what's a swing structure, what causes a swing structure, and how do you confirm a swing structure. Now, this is where we get to some advanced things. Now, how do you confirm a swing structure first? We confirm a swing structure by seeing the break of a previous high or low. All right, fine. Now the question might be, even a normal structure, it break the previous high or low. So what do I mean by that? There is an internal structure that is supposed to take out the previous high or the previous low. But that high, let's talk about what we see here. The very same high that was supposed to take out this low here. This high did not take out this low here. So this is a weak low here. Now this remains a strong high. Now that price, all right, let me point it to you. This internal high here was supposed to take out this previous low here. Okay. Now this very same high the reverse from here, it did not take out what this previous low. So now as it stands, this is our swing low. However, this very same swing low take out what this previous high here, right? And then the very same swing low did what? Broke the previous high here. It now it is breaking this high that was formed after breaking this structure here. Now this is a higher high broken by this swing low here. Now that's a confirmation of a failure of market structure. As I mentioned before, that we'll do some advanced things. Now this is how we confirm a failure of market structure. So now in that failure of market structure, you take an entry in a breakup block. Now I explained to you what's a breakup block. Now what does that have to do with the chart that we're looking at? This breakup block was mitigated here. Then price pushed far away from here. Now, here is the thing again. Since price respected this breakup block here, and price had to respect this breakup block here. Alright, cool. Now, what do we do? Remember, the swing low is here. It's in this candle here. This is the swing low of the entire structure, of the macro structure. This is a microstructure. This is a swing low of the macro structure. Now, always check where do you have the swing low. Where does it start from? I always say that there's no random move in the market. On weekly time frame, it is not much clearer, but it is much clearer on daily. Now, let me give you a hint. If you already seen it, then congratulations to you. Now we have a structure, we have a break of market structure here. We have a break of market structure right here. We have a break of market structure right here. Now, at this break of market structure, what do? We look for an order block or our point of interest. I usually say to my mentees that we have an order block and then we have a point of interest. Okay, so now what do I mean by that? This is to say we have a valid and a clear order block. Now the characteristics of an order block, if they're all met in one candle, then that surely is an order block. But if one of them is missing, then that is not an order block. But then we have to use the very same candle to take our trades. And then what do we say about such? Now, we call that our point of interest. Some call it an area of interest. Well, again, it goes back to what, to terminology again. Now, I call that our point of interest. Now, the characteristics of an order block, we know that by now it must take the liquidity and it must break the market structure. Now, if it breaks the market structure, if the candle breaks the market structure but does not take the liquidity, are we not gonna use that candle as an entry? Of course we're gonna use that candle. But now the question comes back again. Is that an order block or not? Right? So now that is not an order block. Why is it not an order block? Simply because it does not meet all the characteristics of an order block. Now that is what we refer to as a point of interest. Right, cool. Now let's deal with that. Where is that point of interest in this structure here? This candle here. This candle on daily time frame. Okay, yeah, on weekly. This is our point of interest on weekly time frame. I already explained why this is our point of interest. Now this entire candle is our point of interest. Okay, like this. So now we understand why we have this swing low here. Then we understand why we have this deep mitigation here. Now, notice how we started from a naked chart. Now we have all these markups here. Now we understand why these swings. Okay, cool. Now let's come to the current price action again. At this break of market structure here, what kind of structure is this? Again, this is a failure of market structure. Why is this a failure of market structure? Simply because this high did not take out this high here. So also this high broke this low here. As I said, we'll do some advanced things. Now, this is a fail of market structure. So there are entry types, there are entry standards. Whenever you approach some such kind of market, right? You don't just jump and take an entry simply because you see an order block. You need to know which order block will be mitigated and which order block will not be mitigated. So now in this instance, remember this rectangle is for weekly time frame, right? This rectangle is for weekly time frame. Now, what do I see? Oh, it's for monthly. Sorry. So now, what do I see on weekly? Already, on weekly we have this swing high and then this swing high again, 1 and 2. But why are they important? 1 and 2. Let's start with 1. Okay. Let's start with the first swing. Now, in a fail of market structure, you have to look. Now, I'm giving you this for free, but this is for my mentorship. Please listen very carefully. Now, in a fail of market structure, you have to look for that for a breakup block. And what's a breakup block? How do you find a breakup block in a fail of market structure? Is the original candle that was supposed to be an order block or point of interest, then use the very same candle as your entry to the opposing direction. Simple as that. Now, where is the original candle that was supposed to be our entry? Now, here is the candle. I already okay. Let's do this. Before we get to the candle, notice again how we have this liquidity grab here, right? We have liquidity grab in which direction? In a bullish direction. All right, but the unmitigated order block is in which direction? We have to buy from that order block. But now the market is playing the mind games. Now they're mitigating this POI here, and then they even touched this now, and then they're even breaking the market in a bullish direction. Now, what is this now here? This liquidity grab. Is it a break of market structure or what? Of course, it is a break of market structure. What do you do in a break of market structure? Look for order block. Where is the order block now? Here is our order block here. Now this is for monthly only. This will show on monthly time frame. Okay, fine, cool. Now we have this candle here. All right, as the original candle on this break of market structure here, that was supposed to push the price down again. Now remember, what did we say? We said this is a failure of market structure up here. And then this might sound complicated, but it's easy. You just have to pay attention only. Now, this is the original order block here that was supposed to push the price down. But now we have a break below it. And then again, we have this wick here. We have this wick above the very same rectangle that we say is an original. Does that then mean that if you took your sell order here, you would have lost? No, it does not mean that. What then does it mean? We have another failure of we have another breaker block here. Okay. We have another breaker block there. Okay. So now this is a breaker block in which direction? In a bearish direction. What do I mean by that? This is what I mean. This candle was supposed to hold price from here, was supposed to push the price back up from here. This is the open, this is the close here. Okay, but what we see market violated that and it pushed further down. Now let me clear everything so that you can see. Now the original entry here was in this breakup block here. This breakup block here. After this break with this bearish candle, and then we have an instant mitigation. Yeah, this is just some advanced things. If you're a true smart money trader, you now understand all these things already. Now after this break, we have an instant mitigation, because each and every order block is, we have two kind of mitigation: instant mitigation and liquidity mitigation. So now here we have an instant mitigation. We don't have any liquidity mitigation. Okay, cool. Now we have this mitigation and then price drop. As price was dropping, what then happens? Price came back again to this point of interest. And then this point of interest, it is not violated for now. I always say this thing, always, wherever. I say that do not remove your markup until it is violated, not mitigated, but violated. Look when this POI was created by the market makers. On the it was created, let's say 5 July 2020, and then the mitigation happened in August. After that, the third mitigation happened in October. After these mitigations, what then did price do? The market makers forced the impatient traders, those who trade on weekly, they forced them. They forced them to be liquidity. They turned them into be liquidity. What do I mean? That the market makers made the impatient traders to be liquidity. Those who bought here, the liquidity is below this rectangle. Those who bought here, the liquidity is below the very same week. Those who bought here, the liquidity is below those weeks. Now they started to grab liquidity from here. As they were grabbing the liquidity from here, now I think you understand that we have many types of liquidity, and one of them is trend line, right? So now this is a trend line liquidity here. So now we see this break here. It's a sign that all the liquidity resting from this initial point here will be taken. Now, when all this liquidity, when all this liquidity is cleared, what is the main target? The main target here is to take the last liquidity after mitigating a failure of market structure. This is how those who are behind the scenes are controlling the market. They cleared all the liquidity, but the main target was to take liquidity that's resting somewhere here. So now, as you can see, this week here, week WICK, week here, took all the liquidity, and then again, what did it do? It mitigated this point of interest. and then we have this current price of action. My focus was on this current price action, not to show you what happened there, but I'm just having that messy for today. Now let's get back to the current price action. On weekly, we see that okay, price mitigated this and then it broke structure. On weekly, we are okay with it. Now let's go to daily. Now then, this is where it starts to get interesting. Then for now, we will not deal with this big bullish order block here. We will not deal with this big bullish order block. Let's come to this now here. All right. The very same things that you see on a higher time frame in anything that you trade is the exact thing that you'll see on a lower time frame of the same thing. Yeah. Okay. So now what we saw on monthly, on weekly, we must see, not we should, but we must see the very same things on daily and downwards. Okay, fine. What do I mean by that? Here you have to look first for an order block or point of interest. All right. In this instance, after so much explanation, what do you see here? After so much explanation, here is what I see again. I see another here's another breaker block here. As you can see, it is mitigated here. All right, our breaker block is mitigated. Now what do we see again here? We see another point of interest. Where is that? In this candle here. In this candle here. Now I want to believe you understand everything as explained before. Okay. Now this is a breakup block. This is a point of interest here. There's a difference. I explained the differences before. Now again, it shows why we have these swing lows here. Okay. It explains why we have these swing lows here. Okay, cool. Now this is a breaker block again on weekly. As you can see, the mitigation here, first mitigation, second mitigation. Now let's zoom out just a little bit. Now this swing low here was mitigating. Where's that swing low? It's here. That swing low was mitigating this order block here. Now this is an order block and a very clean order block. If you can see which one I'm talking about, this candle here. This is an order block here. This is an order block here. This is an order block like this. All right. Now this candle was mitigated right here. Right. Now again we go back to the basics. What is the structure? Papa. Now what's the structure? We go back to the basics now. That range that comes from mitigating an order block, and then the second range. Okay. Yes, I'm okay. That's my mentor right there. So now the second range have to take liquidity below the first range. That's a bearish break of market structure, right? So what do I mean by that in practical? The first range comes from mitigating on an order block. Then the second range must take the liquidity below the initial range. Where this is the initial range, whereas the liquidity is down here. So what do you see? It's a break. What break of what of this structure? Hence, you say this is a break of market structure. Let me get some water. Excuse me. Papa, okay. Okay, yeah, I'm okay. Thank you. Now, this is we are now on daily time frame. Now we have to refine everything. We have to understand everything here now. All right. Now there's something happening in the markets now. Now we are going back to fundamentals. Whoever now we are in the United States, they are approaching the elections. I think next year. So now, if it's like that, look at when Nasdaq is going. We have this unmitigated order block on monthly time frame down here. So now the elections or before the elections, we are likely to see Nasdaq drop all the way to here. Depending now on who wins the election, then Nasdaq will shoot back up. But it won't just shoot back up straight like this. Look at what happened there. Look at what happened there. So now all these imbalances that are left in from this all the way to here, and from this all the way to here, all the imbalances that are filled now here. Remember, the imbalance have to be filled twice, in a bearish and in a bullish direction, or in a bullish and in a bearish direction. That is how imbalances are filled in the market. Now, everything here need to be filled. All the imbalances need to be balanced sooner or later. Right? Now, I'm not a person who trade news since I trade V75. So this was just a hint to those who will be busy with this thing. So now we are on okay. Since we are on daily time frame now, let's look at what transpired on daily time frame. Before and after the break of this swing low here. Now let's come to this rectangle. Now we understand this thing on weekly to be our breaker block. Okay, we understand this to be our breaker block on weekly. Okay, fine. But then on daily, we have this swing high here. Now, what caused this swing high here? This swing high was caused by a change of character. Now you might be asking yourself, where is the change of character and in which direction? Well, we have a change of character in a bearish direction. Where then is that change of character? Look at this break here. Look at this break in a bullish direction right here. As I said, guys, this is my last video of Nasdaq. After this, I won't give any Nasdaq lesson until I find the best broker, a good broker. I don't know when, so hence I'm giving you the full analysis of this thing. Now we have a break in a bullish direction. Again, we have a break in a bearish direction. Then what is that? A break in two directions in one structure. That's a change of character. Now again here you come to the original order block, right? So where's that candle that was supposed to push the price high? This is the candle. This is our POI. Hence we have this swing here. And then again, guys, notice one thing always. If your order block is properly marked, you won't have even one pip above or below your markup. That will never happen at all. If your order block is properly marked, you will never, even a single day, have even a pip or half a pip above or below your markup. Now, I was coming to this swing high here. Now, this swing high, notice now what happened here. As price was moving back to mitigate what this breaker block here. What did price do? It opened down here, and then where the market opens, it leaves liquidity, and the market does not move without liquidity. So what happened with this bearish candle? It took liquidity that was here. As it took that liquidity, what do we see? It's a break of market structure. In which direction? In a bearish direction. What kind of structure is this again? What kind of structure is this? It is a fail of market structure. The entry is the entry in a fail of market structure is what? It is a breaker block. Where is the breaker block? This is the breaker block here. Hence we have this swing high here. Right? Just stay with me, guys. Some advanced smart money concept here. All thanks to Michael. He opened our eyes with this thing, and that guy is just the best. So I'm trying to to follow in his footsteps now. Michael J, the founder of SMC, as far as I know. So now, what then happens here? Now we saw the use of this rectangle on weekly, right? So now we are on daily. We don't see any use of that big rectangle. Now we are dealing with this with what we see here. All right. Now, as price was mitigating this, again, what happened? We have another break here. After price mitigated rather this breaker block, we have another break of market structure here. We have another break of the market structure here. Okay. Now, after this break of market structure, what kind of a structure is this? It's a swing market structure. Back to the basics. What's the entry at the swing market structure? We take an entry at what? At the breaker block. Where's the breaker block? This is the candle. This is our breaker block. Yeah. And then if you're still asking yourself, why do I choose this candle, not this one? Why not these other two up here? You need to know what is an order block. If you know what's an order block, you are done. I explained to you what's an order block, so I don't have to go back there. Now, this is our point of interest. Remember, the break is here, not here. So this is not a mitigation. The break is here, and also this not a mitigation. Then what do? Drag your rectangle to our right. What do you see here? the first touch, second touch, then the third touch. Where's that thing exactly? Here, yeah, exactly here. So now we have this swing high and this swing high, and then we have mitigation and mitigation. Now, what is the difference between swing 1, 2, 3, and 4? Now, here is the difference. Swing 1 was not mitigation, but the market makers were introducing new and more liquidity on retail traders. Why do I say that? Look at how they reversed the market from there. And then if you are impatient, you will say, okay, now we have this as a point of interest, so it means I have to sell from here. When you sell from here, look at this week here, it took you out already. Then liquidity is grabbed. Again, then you become angry, and then you chase the market. You say, okay, the market now push down. When it comes back here, I'm going to sell. Look at what happened again. Just small pips, you are out. Now the now swing high week number 4 fully mitigated the order block. Now there's partial mitigation, and then there's a full mitigation of order block. Now, what is that? You have to understand all that happened inside the order block on a high time frame, and then find all those things on a lower time frames. If your order block is partially mitigated, wait for that order block to be fully mitigated. And how do we see that? Now, that's a topic for another day. Now let's deal with what we see here. Okay. Now, you know that this is our POI, and then this is a mitigation again. Okay. As price was pushing up to mitigate this fully, what do we see again? It left liquidity here. After the mitigation, what do we see? Liquidity was collected. Then what is that? That is a break of market structure. After the break of market structure, what do? Look for that order block or point of interest. Now this is our point of interest. That is why we have this tap here and price, and then the market tend to be bearish from here. This is not just a random move. There is a reason why. Now, what is the target? Is the swing low before the mitigation. Where's that swing low? This is the swing low here on daily time frame. Now I can end this video here. I gave you everything that other kids are paying to get from other people, and some they paid to be in my mentorship for such things. But it is the beginning of the year. You have to be a cheerful giver in order for for your things to be okay. That's what we were taught in African families anyway. So now I can end this video here, but let's push it further. Let's see how much time do I still have. Okay, I still have a couple of more minutes. Now let's go to H4. I don't usually use H4. If you watched my videos and if you've been with me before, I don't usually use H4, but there are some people who use H4. So now for their benefit, let's go down to H4. Let's go to H4. Okay. Oh yeah. Now I will not cover everything here. What you see here is a small version of what we discussed on high time frames. Simple as that. Let's go to the current price section, right? This is where the important things are at. This is what we have to discuss now. Okay, cool. Now we have this mitigation here. This is our POI on daily, but on H4, as you can see, our POI is not fully mitigated, but it's partially mitigated. And then if it's like that, what do? This is the order block now up here, and then this will be for D1. Show on D1 only. Okay, cool. Now price must mitigate this. The market must mitigate this. Now this is where things start to get noisy a little bit. It start to get noisy for one reason, and then what is that reason? Just to confuse us. It's either you tap out or you stay in the market. If you use H4 to check where your trades are going, now this is where you have to start. Now we have this swing high here on H4. We have this swing high here on H4. But really, is it a swing high or what? Now, as I said, things start to be messy now. We have another break of market structure right there. Before that mitigation up there, we have this break of market structure here. All right. So after the break of market structure, what do? We look for an order block. But again, what kind of structure is this? I think you are now aware. I don't have to say it, but for the benefit of those who might have forgotten already, this is a fail of market structure here. Then which entry do we use at the fail of market structure? It's a breaker block. Where is the breaker block? This is the breaker block here. This bullish candle. This bullish candle is a breaker block. So we pull our rectangle to here. Again, this I've been saying even in my previous videos. Whenever you see an order block, even if you know that this will be a breaker block, expect a reaction in that breaker block always. Okay, expect a reaction in that order block always. As you can see, this week here price moved a little bit back up and then dropped again. But what do we do? Do not remove your markup until it's violated. So now what do we see here? This is where the break is of this breaker block. This is a break of a breaker block. Yeah, it gets a little bit interesting now. This is a break of the breaker block. Now instead of us buying, what do we have to do? We have to sell. But now this is the candle that broke this breaker block. Now where do we take our sell if things are like this? Now we must say, okay, we have a break here, and then price broke more structures in a bearish direction. The the people who have big money, like the billions of dollars every day, those who put billions of dollars every day, they did all this on purpose. They did all this on purpose. All this was done on purpose, just to confuse you. All this were done in purpose. All these were done in purpose. The real place where they're targeting to take their sell, their first sell, not the ultimate sell. Their first sell is in this breaker block here. Look now, this is the 12th of December, according to this broker. Then on the 20th of Jan, then they mitigated what this breaker block. Now, if we pull our rectangle to our right there, that mitigation right there is so important. That is why in trading, the patient traders take money from the impatient traders. That's what always happens. It always happens. So now these swing lows again here. These swing lows again. Remember, this is an order block on, I think it's weekly. This big rectangle. So now these swing lows here, they're mitigating something here. And it is important to understand why we have these swing lows. What exactly are they mitigating them? And then to find out why, please do your own breakdown and analysis of this order block here. All right. So now the reason why this swing high is because of this breakup block. Now this is H4. From here, and then you can take it down to M15 if you use M15 for entry, or M30, even M5, or even M1 for that matter. So now, this is all I wanted to show you, colleagues in the industry. And if it was your first time, please share with me what you found interesting or not interesting, or something that revived you, or something that challenged your mind. Please do like, subscribe, hit that alert button, that notification button rather. So please share with others, and then and access to my mentorship. I will leave the link. The link will take you to my Telegram, not to the mentorship channel. No, to my personal Telegram, and then I'll show you everything there. What needs to be done if you want to join my mentorship. But know that there I will deal with V75 and yeah, V75, anything that have to do with deriv. Yeah, we will deal with that. So this is my offer to you as the year begins, and I wish you a happy trading year, guys, and may all your peeps be in profit. I don't wish anyone could hit a stop loss this year. No one should hit a stop loss until the 31st of December. And that is possible if you are patient and if you do what you know, not influenced by the external forces. So this is my offer, colleagues, and thank you so much for your time. I know that this video is a little bit long, but share with others what you found. So yeah, for any other thing, talk to me on my Telegram. My name is Njabulo. This is my YouTube channel, Njabulo, right? And I'm out. Shut.